Here we are. I know we were originally going to start this at 3:30, but clearly we're both that excited because I logged on early and you were already there. So I just texted Mike and told him to hop on whenever.
How about
We
that market today, huh?
It's been a crazy day in the market. When it opened, I was up mediocre and then went down huge while I was getting a haircut. And
Haircut.
you know, thank you. It was actually probably a blessing.
I didn't say the haircut was nice. I said it was an expensive haircut.
Oh, it was that it was an expensive haircut, probably like a $15,000 haircut. But but then what happened was it's probably a good thing I was out getting a haircut. Then I had to get my car service running errands because maybe I would have done some irrational moves had I not, because things just looked like we were heading for that ugly turn. And then it looks like things are swinging around in a big way here.
Yeah, I think there's been a bank conference going on, so it gave another bid to all the bank stocks, and people got more confidence after hearing some of the stuff out of that meeting. And Kramer was negative on it this morning, so that kind of put the kibosh on it early. You know, he said, "Oh, these things will open up and then go down," and
Yeah,
in there.
it's interesting because Kramer, when you follow his charity trust, definitely has more of a portfolio that caters to what was going on 2 weeks ago more than now. And I don't necessarily think he's wrong, but he even sent something out to his subscribers kind of saying, like, watch what's going to happen midday and you'll see some of these stocks will start to turn around. He wasn't wrong. He kind of called the bottom on Take Two, TTWO. Yeah, which that and Nvidia, he sent out notices when he thought both stocks really hit a bottom after like what he called a healthy sell-off. And he was like, watch these stocks now head into close. Take Two, symbol TTWO, turned around in a big way. I mean, that stock was down almost 10% yesterday and then gave up a little bit more today. And it almost looked like it was just a healthy sell-off, and now it seems like it's rocking again.
Yeah, look, these tech stocks and stay-at-home stocks were due for some type of pullback, and it's better to have it on a day when another group can kind of take over. And that kind of keeps things even.
And the scary part about the pullback is when it starts to pull back, it's just you don't know. Is this that healthy 10% correction? Here's Mike. Is this that healthy 10% correction, or is this the turn of what the bears are predicting, and are things just about to shit the bed? So that's where it's like always so hard to pull the trigger. But personally, I could see things quickly shifting back to the stocks that were doing really well up until yesterday, kind of taking over the narrative again, because I don't actually see how the companies that right now are getting all the love, even though the economy is reopening, they're gonna be the ones that start to come out with awful earnings. Like even when you look at the airline stocks, I've been trying to book flights and there's just hardly any flights available. You can't even get on one if you want, unless you're willing to inconvenience yourself.
They'll add capacity if that's the case. I mean, computers set that up for the airlines. If they see the demand, they'll just add flights.
Well, they also have to scale back a lot of their flights, keep in mind. That was part of what they did with the cutbacks when everything was locked down. So that's not something they can just turnkey overnight to switch.
Well, yeah, that's one example.
Overnight.
What's that?
They pretty much shut it off.
Yeah. So it's going to take a little time for them to actually add, fleets and schedules, and, they had to limit the air travel because of the lack of demand.
But now that there is demand, that is really good news for them. So they'll be able to turn the switch and move some more planes into slots.
I think if you're a long-term investor, you would be ignorant not to jump on a Delta or Southwest or United right now and just hold it, because people are going to fly again regularly forever is the reality. They're going to. I've talked to so many people that are pumped to go on vacation and fly to Hawaii. So when I hear that, there's definitely the idea of people not flying again, unless they're extremely old and sick. I don't see that being a thing.
Well, yeah, no, I think
a better business from this.
Yeah, I think long term, the stocks that have been crushed because of the pandemic, a lot of them are going to be fine. The ones that are going to go bankrupt, it's going to happen fairly quickly. But I do think in the short term, the last 2 days, like that's kind of enough now. Because at the end of the day, when you look at like restaurants, for example, the reality is, even though the economy is reopening, they're doing half occupancy, things like that. Like they're going to come out with earnings that are subpar. And you would think it's going to make investors want to race to the names that have been there throughout this pandemic that are continue to be there. So like I look at Peloton and I see they're selling tons of their equipment. The subscribers are going up. I'm asking myself, why is this stock selling off? Is this just a healthy little correction, a 10%er? And to me, it is. And that's where I'm standing my grounds with those types of names still.
I bought more Peloton an hour ago.
You did?
Yeah, I look at them as a huge winner from this. I think gyms will be long-term impacted by this, personally. I think you're going to see Peloton having way more subscribers ongoing because I think people like the idea of efficiency of being able to work out from home. When you think about how many people are now going to be working from home from this, that like when you hear Twitter and Square are making it where you could work from home permanently if you want. You have to think about those ramifications too. With fitness, I think those coincide. Even with finance, when you look at like Paul's girlfriend doesn't have to go back to the office anytime in 2020, it sounds like. So when you're hearing that about major like Morgan Stanley's, Goldman Sachs of the world not forcing the hand on that because of liabilities, people with a lot of disposable income in that realm especially, you're going to see them buying Pelotons on another level, especially now that they have a lower price point bike.
Yeah, no, I agree. Bob, could you believe what's going on with Penn National today? I mean,
Penn National is on. Hold on 1 second. I'm just buying a stock. Hold on.
What are you buying?
I'm buying Alcoa, which is out of the ordinary. It's a stock that definitely broke out today. AA, and it's basically a shitstorm for a company. But
and you're buying it when it's up 11%.
I am.
So now, what is your thought process on buying into strength on a day like that? Because I love where your head's at. I've always been a big believer in that personally. Instead of trying to catch a falling knife on a down day, you go on the up and up, where a stock's having a phenomenal day and you buy into that momentum. What are your thoughts?
I really don't like doing that, but this stock has broken out of the downtrend, and it is an area that the market is looking at now. So it's got room. I mean, you look at the chart on this thing, there's no reason it couldn't go to 12 and a half. Mm-hmm. And it's
take us through what you look at when you say that, because you always tell me like, oh, this stock's breakout, or if it gets through this point, it's in breakout.
How do you see that?
And I like to think I'm starting to get that with the different resistant levels, but like take us through what you actually mean. So I'm looking at the AA chart right now. I see it's trading at 970.
The layout too, so for people that aren't seeing it,
I think what you have to do is first of all look at a 1-year chart on and that'll give you a picture of what has happened to this stock. I don't have the chart in front of me, but I think it came down from about 24 in the last year, got down to 6 and change. If you look at the activity that took place between the virus and now, you could see where the stock suddenly, maybe yesterday, started to break out, and today totally broke the downtrend. And it's almost like free sailing until you run into resistance, which, if I recall when I was looking at it earlier, is somewhere around 12 and a half.
And then you define resistance for people that are new to the market. What does that entail exactly when a stock is resistant?
When you're talking about resistance and support, old support areas become the new resistance areas. And basically what you're doing is you're looking for areas where a lot of people were trading. As a support level, a stock, let's say, trades 12 down to 10, up to 11, down to 10 over time. And you say, wow, 10 is really support for that stock. Every time it hits it, it kind of bounces off. And then if it breaks 10, that 10 level becomes the resistance on the way up.
So support.
So the support and resistance become, they interchange with one another when the stock makes its moves up or down.
And then how do you look for a new support level at that point when it breaks the resistance?
Well, if you break through on the upside, that becomes the support again. If there's enough activity, right?
Mm-hmm. So when you look at this AA stock, you're kind of saying that for a while, the resistance level was at 8. And anytime it would break 8, it would come back under 8. And now it's clearly broken through 8 in a big way. And it looks like it's not necessarily going to. So that's where now you're like, okay.
And the beauty about technical trading is you could be wrong in 2 minutes and totally screwed it up. And then you can blame it on fundamentals if you want. Technical trading is only good till the next trade.
And Dad, how do you
keep another tool?
Because I know you gave me great advice a while ago when I was starting to learn from you about day trading, how it's very viable option to sometimes just set limits and keep emotions out of it completely, where a day might be phenomenal or terrible, but sometimes it's good to not even pay any attention to that and just focus on the actual limits.
Well, yeah, if you have a strong conviction in the names that you're involved in. By the way, I also recommend, if you're day trading, to not get too spread out with names. Try to just pick a handful at most and follow those stocks, everything about them. And if you just stick to those names, you're going to become somewhat of an expert in those few names. You'll know when news comes out. You'll know what the resistance support levels are. But if you start spreading out into, I heard about this one or that one, eventually you're going to miss something, and then it's not worth doing it that way.
And for our listeners, whoever isn't familiar with the 80-20 rule, the Pareto principle, it's focusing, really, this goes into play with that too. The 80% of your money will probably come from 20% of your efforts. So what our father here is highlighting is dead on. Don't spread yourself thin on trying to pick and choose 30 different stocks to day trade. You're not going to get anywhere. If you do your homework on 2 to 3 tops, and pick wisely, it'll be way easier for you to make sense of day trading.
Yeah, I think that's sensible.
That's definitely great advice. Dad, are you selling anything today?
Yeah, I was long a little bit of car off of Michael's story from a few days ago. I sold just 1,000 shares today. And
you don't see that breaking out more?
I do, but I got a sizable position, so I don't mind making sales in stocks that are moving up, because then if they do break down, you could buy them back.
Sure, Dad, take us through your thought process, for example, with when you own X amount of a stock. So for example, how much car did you own before selling off 1,000 shares?
I owned 7,500, but then I had sold 1,000 yesterday.
So what goes into your ratio with that? Is there an exact science you have around that? Or
I don't really have an exact science. When I feel my position is big for a day trade, I'm looking to make a sale.
And take us through the difference between a day trade where you're already in the green versus lowering your average price, where you're trying to reduce a tax penalty and, like you taught me with working my way back into on Boeing.
Well, yeah, you take Boeing, for example. If you have a big loss in Boeing from previous trade, if you buy some down at a lower level and then make a sale, you could use the sale, for tax purposes in case you have big capital gains. So you could use it against the loss.
And then make your average price go down by offsetting, right? A lot.
Right. I mean, at the end of the day, you're lowering your average price if you're buying and selling. Like Boeing, I got a position that was bigger than I wanted to be, thinking I'm going to trade off some of it. So today I sold 100 shares at above 149, and I bought it back when it got down below 145. Now I have it out again at 150 just in case.
For our listeners and viewers, the way it works on these trading platforms, you can set it to offset lots, where you have to be careful with what Bob just highlighted there, where you don't just sell any position you bought in. So when it comes to day trading, you really want to make sure you're getting out of the correct position and not just selling the last position you bought. So it really depends on what your agenda is. If you're trying to just make a quick buck, off of a pick you made correctly that day, that's one thing. But then if you're trying to work your way back off a stock you're down and picking your spots, you want to make sure you're selling off an earlier position that you are currently down on.
Dad, I'm opening up a sell order as well for Boeing in case it hits 150 because
Right.
I loaded up on that a few days ago and you said you liked it for I'm obviously long on it, but for like a short swing trade.
Right. And
And
when I say 150, I always like to put it out there a little below it because it becomes a level that's harder to get through. So many times you'll see stocks get to 149, for this stock might get to only 149.80 and, backs off because they know the big number's right there.
so do you actually have it at that?
I think I got to check. It's somewhere around there. I don't have it at 150.
Gotcha.
Yeah.
Yeah, it'll be interesting to see what happens in the last 30 minutes here because yesterday
Where
looked
is
like
it
the
now?
market. It's I think holding up. Let's see. Yeah, it's up 368. It's a similar thing as yesterday though, where it opened up a lot more and then slowly just gradually got worse throughout the day. But today kind of feels a little bit stronger than yesterday. Yesterday it felt like the market was about to roll over.
Yeah,
which maybe it will today.
the S&P was right around 3,000 yesterday, and there were probably sell programs that were set up to sell stocks when it got to 3,000.
And also
through that level, so it may hold.
the
So the
Hong
question
Kong
is,
at the end of the day yesterday, it was I think that put a damper on things a little.
so I guess the question is, when do those sell orders change? Like, what happens then today when it's the same story? It's S&P right above 3,000.
Yesterday, you had people that wanted to make sales at 3,000. There's probably still some today, but they're a lot less than the first day.
Since
We get through that. It's
is that because it hit 3,000 yesterday, and that naturally leads to the technology being, that resistance has gone through.
right. There's definitely different companies out there that'll set up a program. S&P hits 3,000, sell a certain dollar amount of stocks, and I don't know what they do with the money, but
And same on the other side, where maybe like when it hits, if it goes down then to 2,800, they have the buying program set up and they're just playing the swings.
right, they're playing the S&P swings. You have a lot of indexes out there, and they have.
You've always taught us too with those round numbers where a stock hitting 100 and it actually hits it. That's why you like it going up 10 to 20% from there.
Yeah, that has happened. Who knows why that is? It's a psychological barrier.
But isn't the market all psychology? When you think about it, that makes sense.
Yeah, I mean,
humans are numbers creatures by habit. They see a round number, they naturally are more at ease.
Right. I don't know about you guys, Mike. I know we were talking about this a little earlier, but it's starting to feel like the market's getting choppy, where the swings are starting to get big again. It's kind of scary. I'm hoping that there's not like a night where, we wake up and the futures point to like down 1,500 for no given reason at all, just because just the last couple of days they've seemed a little, choppy. What do you guys think about that?
Well, I think you're seeing a rotation, which is healthy.
Yeah.
There's a lot of stocks, like we talked about yesterday, that are still down huge amounts and are just starting to move off the bottom. So there's plenty of room on those names. On the other hand, it's choppy for the stocks that everybody has been in, like the Amazons in the world.
Facebook, when you look at it, I'm as bullish as anyone on that stock, but it's run through the moon and it's going to naturally come down a bit.
That's choppy.
And I think the hedge funds are heavy into those names, like they're all in that group.
Yeah. And now they're going to take profits off the table because they're all at all-time highs, and now they're going to rotate into the beaten down sectors.
And
you got to go ahead.
No, I mean, it's just a matter of supply and demand. Short term can force severe moves like that, like we saw this morning.
You got to almost think for the market to get to a point where, everyone's kind of all in, which is typically when you see those big downward trends or big overnight crashes. You need everything to come up. And that's where, like right now, it seems like the rest of the market is starting to join in on the rally. What I would like to see is the stocks that are now giving up also come back, where you have like all of them move up together. And that's when I would start to feel confident that it's time to get into heavy cash positions, because until personally I see the whole market rally together and not just these select companies, because that's kind of been the narrative, is everyone keeps, the bears are like, why is the market going up? Why is the market going up? But there's been a lot of stocks that have been down in the doghouse up until really yesterday. And once you see them all come up, that's when I'm going to start getting ready for a huge correction, but not until they all come up.
Yeah, Dan, I think you're spot on answering your question. The 1,500 drop day, I don't see that happening until they all rally, because when you look at how far off the highs a lot of these beaten down stocks are, still 40, 50%, even on next levels, it's, there's a lot more room to run with rotation. I think it's about staying ahead of the narrative, with knowing when the shift is coming with the institutional money and being able to be at the forefront of that to take advantage of it.
Yeah. And, and I'm not sitting here. I don't think that we're going to see the same type of rally in stocks like the airlines that we've seen in these like popular stay-at-home plays at all. But if they have a couple more days like they had, or even what they've already had, what's already happened, if you then add to that the companies that have now given back, if they come back and these companies stay at the levels they're at, that's when I'm going to start to get into heavy cash positions.
I don't see it happening personally with the unemployment rate. I was talking to Dan about this earlier, that when you look at history of the unemployment rate being above a certain bar, coinciding with the market continuing to go up, there's not a correlation there. So,
but this is so different because, first of all, they're paying people to be unemployed huge amounts of money compared to what they ever did in the past. And, a lot of these people are coming back to work now. So that's the big question is the unemployment too high, keeping people from wanting to go back to work?
I think that is exactly what's happening.
And they are talking about that in Washington. And
on top of that, the underemployed people, like we know in the gig economy, how many people are employed but are not able to actually support themselves.
So guys, we got a question actually, and this is something that we've talked about for a while. It comes from Dave Becker, and his question was, do you think the Fed pumping the market, we won't see a huge downfall like we saw in March? So basically, to extend on that question, obviously that's why Buffett's freaked out about the market. He's never seen trillions of dollars get printed and just thrown at the market, and at some point something has to give. But does it really have to give at the end of the day? And that's, something that I think everybody talks about long term all the time. Dad, what do you think about that?
Well, I was really in that camp that this is going to come home to roost hard. And then I listened to Mike Milken, who I really respect. And he was explaining with rates this low, the Fed can afford to put a lot of money into the system. That seems like a ton compared to in the past history. But because the rates are so low, it actually isn't as large as everyone thinks it is. And as long as rates stay low, they could borrow money at such ridiculous rates that they may get away with it. But it's going to take many, many years for it to come home to roost.
But then what would need to happen for it one day to fix itself? Like, would they need the rates to be really high? Like, how does this eventually turn around? Or are they just kind of looking at it like, let's just push off this problem?
Rates being really high is going to be an absolute disaster because the government's borrowing at whatever the rates are. So I think they're going to keep rates forever low, at least forever being the next few years, because they can, and the dollar is still supreme in the world.
So, Dad, is there a legit chance we're heading into a legit roaring 20s on another level?
Yeah. Why not?
So there are some very bullish tendencies to think about here and I think we have to also ask ourselves, with the election, is that going to even matter who's in office and at the end of the day from all that's just happened? Does it actually matter for the stock market in the next couple of years whether Trump's even in office again?
Well, I mean, policy will obviously change if Trump gets thrown out. And the question is, will the economy be able to handle big tax increases? He's talking about raising corporate taxes to 28%. Biden, and what effect that'll have. I mean, it's too early to tell.
Do you see that actually coming to fruition, or is he just saying these things?
No, I think it could come to fruition because I think if Biden wins, he could probably end up with the Senate and the House.
But doesn't it change a bit the mentality, even from him, with what's gone on here, to make that type of bold move?
Well, don't forget, it was at that rate before, so they're just bringing it back to where it was. Or, it's hard to know the effect of it. The market psychologically will not like the idea of Biden, but it's a hell of a lot better than Bernie.
Yeah, when Bernie was yanked, pretty much.
Back to the Roaring 20s comment. You think there's actually a chance the market just shrugs off the stuff happening with China, shrugs off the notion of the coronavirus coming back in the fall with a vengeance, shrugs off the trillions of dollars that just got thrown in, and just kind of goes on its way and just surges to all new highs like nothing ever happened?
It never just shrugs it off. It has to live through it. And you'll go through these periods where it's horrible and it seems like the world's coming to an end, but then it seems to see the light. So that's all possible. And in fact, the positive side of Biden would be that China would be probably looked at less severely as the way Trump's looking at it. So the market may like that part of it. But
there's way too much focus on China when I get it for the short term. I don't see that being a thing in the future. I don't think China is set up to be on the world stage the way a lot of people think they are. I really don't.
Over 420 points now.
Wow.
It's gone up another 100 points really in the last 10 minutes of us talking. Clearly, a lot of traders are listening in and just pile into everything they can after hearing Bob's bullish comments.
Well, obviously, in effect, right?
Yeah, I mean, take two, TTWO.
What we should do here to end each segment on the day, or we could start before even beginning with it, each of our picks of the day. I think we should have a long-term hold, like something we like for the long term, and then something just for the next 24 to 48 hours.
Okay.
So, Dan, let's start with you.
All right. Well, I'll start since you just asked me to. And I know, Mike, you and I have been talking a little bit today, but I like Costco heading into earnings tomorrow. I think they've obviously been one of the huge names during all this. And because it's kind of a monthly subscriber business, I don't see it being a company that erases its gains when things go back to normal at all. So I think they're going to have dominant earnings. And I think people are going to want to get into that stock. It's also kind of a recession-proof stock. So I like Costco. I could see it getting up to 330. And right now it's at 300. Not like an overnight move by any means, but I see it trending up after earnings. And then a short-term stock, I've been all over DraftKings. I'm up 74% on it. I've been moving in and out on it. It moves huge in extended hours. So, I'm not saying my swings are always right, but I've been selling on the way up, and I buy anytime it comes down more than, a few percent in a day. And the CEO of that company is such a marketing bullish guy when he talks. And that company, until they surpass Las Vegas Sands in market value and become the number one gaming stock in the world market cap wise, I'm going to keep betting on them.
There we go.
So Costco and DraftKings.
I like it.
Go ahead, Mike.
Well, Dan, you got me on the Costco, but I just bought some before we got on here. It's the first time I'm even in Costco. I love where your head's at with that. I think short term, a stock I really like, I know we've talked a bit about it, is Chewy. I think not only for the short term, but for a short term trade right now, it's a stay at home stock that's gotten beaten down the last couple of days. I've seen their boxes all over New York. I met a couple pet owners at the park the other day that just signed up for it. I'm expecting them to be going through the roof from all this as a major winner. I don't see how someone gets off that platform once they're signed up.
You know, it's unfortunate because Chewy dipped below 38 today, and that was such a buy. And I wasn't watching it all day, but when I randomly looked at it and I saw it was right around 40, and I saw it come down all the way to below 38, that was such a level.
I thought more at 38.40. So,
yeah, no, I like it. I think they're going to have great earnings, and I think that's one of the stocks that people are going to quickly jump back into, really quickly, actually. Like, I love it. Yeah.
The long-term stock, Dan, I know I brought this up to you earlier. I like CGC, Canopy. I think the marijuana stock movement is going to start picking up a lot of momentum from federally legalization coming out of this way sooner than it would have if the pandemic didn't happen. I think getting in that stock under $20 is an absolute steal. And I'm not saying it's not going to be volatile in the next few months, but I think you'll be very happy getting in that now and closing your eyes and looking at where it's at in 24 months with where the world's shifting. I don't see, they're the market leader. The Constellation investment that was made in them recently gives them a major leg up with what they're doing. And we've just even heard, Dan, internally with trying to figure out, is there a way we can get into that arena? A lot of startups in America in different cities getting their feet wet. It's a matter of time. Once that is federally legal, that is just going to skyrocket. And I want to be in way before that narrative begins, where marijuana is the new Facebook, because we know that day is coming.
I like it. I agree.
Cool.
Yeah. Well, I think yesterday I mentioned Citibank.
Thank you. I made a quick buck on that. I got out today.
Now I'm thinking maybe you go a little international on the banks, and Deutsche Bank and Credit Suisse, which I haven't looked at in literally years, maybe are a little interesting here. They've gone up, and they look like they're on the right track. So thinking that Europe might be a little behind the U.S., I think I'd take a look there.
Credit Suisse.
And I don't have anything long term today. I got to think about that one.
I never expected you to actually throw out a European bank. I've been asking you about them for years, and every time you're just like, you don't want to deal with that.
I know, but it's a short-term trade. I wouldn't do it long-term.
Short-term trade.
Had any success on banks, by the way, Dad? Your City pick yesterday. Quick buck, got out of it. I have had such a bad taste in my mouth from bank stocks.
Well, you can't think of it like that because the bank stocks are really, really beaten to a pulp.
I know, and that's why I'm trading them now. I don't like bank stocks long-term for
Goldman Sachs up 60%. It's probably still cheap. And it totally
for anybody that wants to play the opposite side of the market, I got a great suggestion for you. I'm down thousands on it, but it's a nice hedge. It's SPXS, and it basically does 3 times the opposite of the S&P. So if the S&P is down 100, let's say it's down 1%, you're going to be up 3% on that stock.
Take us through that. You gambled. You bought that thinking the market was going to go down.
So yeah, originally I did buy it thinking the market was going to go down when the S&P was hundreds of points lower. Like this was like a few weeks ago.
So what are you doing with that?
And don't get me wrong, I'm bullish on the market. Like I have tons of positions that are bullish. This is my only short on the market. I had a couple of shorts a few weeks ago that I closed out of, but you know, I like it as a hedge just because if the market shits the bed one day, and not only that, I've had a lot of days where the S&P has been down, that stock's been up, and the rest of my stocks have been up because I don't really like the S&P. I think those are the companies that are going to have a really tough time getting through all of this. So on one end, it's a hedge. On the other end, I think you could have a successful portfolio with NASDAQ and Dow Jones stocks and then still kind of be short the S&P and make a ton of money. But there's no doubt, like if you have a huge correction day, that stock's going to be up massively. But I am down thousands on it, but I do look at it as a hedge, so I'm not going to close out of it.
Well, you're down thousands, so this could be a good time for you to be up thousands, maybe if you get in, but that's not a guarantee.
You don't want that to make you money. You want that to go to zero.
Yeah, exactly. Betting against a crap hot roller. Dan, I feel like you're the last person to be doing that.
No, again, look, part of me, and this is I don't love to admit this, but part of me likes the idea of picking the right spots and being able to make money in a down market. Like, I don't want to be someone that just buys when I think the market's going up and then go into cash and then just sit there and wait for opportunity. If I think the market's going down, I'm going to pick my spots and short the market, because there's no reason to not play at both sides. If the market is in for a huge dip and you could be a part of that. And that also goes hand in hand with what you were saying with momentum. Like, if you're all about riding momentum, it's pretty easy to ride the downward momentum. Like, you can kind of feel when it's happening, and that's when you can kind of get on these short positions and then close them out when the momentum's over. So I didn't start doing any sort of shorts until this whole pandemic started, and then I started to short a few positions.
Yeah, take our listeners through how a short works. Obviously, everyone knows how to buy a stock. How do you short a stock?
It's basically, you gotta be, I'm pretty sure you have to be you have to be qualified for margin trading, because you're basically borrowing a position that you're then selling at a lower price, being on the opposite side of a trade. So if you short a stock, you're betting that the stock's going down. And if the stock's down 3% in the day, you're up 3% on your stock because you're betting that it goes down. And then you continue to have the short until you decide to close out of it. And then when you close out of it, you're just buying out of your short position, and then you're done. And, the beauty of it is you could ride the stocks both ways. Obviously, if you're on the wrong side of the short, you get punished. And that's why you always hear about these big short squeezes when, like, a volatile stock will have good earnings, goes up 10%, all of a sudden spikes to 25%. Those are short squeezes. And like we saw with Zillow Group a bunch throughout the last couple of years.
Yeah.
If you bet it. So I had a short for a little on Penn National, and I was actually successful with it. This was well before it got close to breaking out. It was like when it was trying to find its way above 10, like right when it had its original bounce off of 4. And I made like a little bit of money doing it. And then, Dad and I were talking, and I was just like, I cannot short this company because, they'll be up 25% in a given day, and I'll just be completely screwed.
I see quickly.
So I did it with Texas Roadhouse. I'm ashamed to admit it because I ended up reading their quarterly call and just like liking the CEO a lot. And I was like, I don't want to short this company. This seems like a good guy. But at the same time, I couldn't be long a restaurant that is so built around dine-in sales that I knew the whole delivery stay-at-home economy, it's going to work for some people better than others. And at the end of the day,
they're not meant for like that type of food. Like, they're not a place I think of as like curbside. Texas Roadhouse. It's like, yeah, sure, they'll do it, but it's not
exactly. And some of it's obvious, like no joke. If you really just listen to some of the reports, 3 weeks ago, Hertz came out and said May 22nd, they were going to declare bankruptcy if they didn't start to see an increase in business, which obviously wasn't going to happen in that short amount of time. Sure enough, they did. And now Hertz is a penny stock. Yep. And like, had you just trusted what they were saying, which is, hey, we're going to go bankrupt. And it's like, okay, this stuff.
What we missed is Hertz going bankrupt. What does that mean for Avis? If you look at Avis's stock, it's completely gone through the roof.
Yeah, I asked you about Avis.
I'll be right back. I gotta get my check.
Remember, I was like, what's going on with Avis?
Yeah, well, that's probably what's going on. But I want to know, is Hertz going to be operating?
But I think that shows why car is a great pick right now. When you think of a car auctioning company, I know they temporarily suspended their dividend, but they're normally a 6% dividend stock too. That is a definite, with the move they just made with bringing in more money. It's because they know they might as well be striking while the iron's hot here.
By the way, what they're paying that preferred is 7%.
Wow. So yeah, I think car is going to be a big winner here.
I wanted to tell you guys, I'm glad you just brought that up, because when I was getting my haircut, this guy, and I forget that speaker company you were talking about a few days ago, Dad, but this might go, what is it? Sona?
SONO.
SONO. So I'm not sure if they do car speaker stuff, but basically I was getting my haircut, and this guy who was getting the haircut next to me was talking to his barber, telling his barber that he works at an auto body shop that specializes in putting like speaker systems in cars, and they've stayed open throughout the pandemic. He said for whatever reason they were labeled as a crucial business for all of this. He said that their business has gone up by over 200% for whatever reason. He's like, people are obsessed with Yeah, he's like, people are getting their cars decked out like never before. So I don't know if there's a speaker play. By the way, Dow's now up over 500 points.
Beautiful. Let's just stay on here 24/7. We'll get it up to 5,000.
Yeah. So, I mean,
Yeah, Goldman up 13.5.
yeah, my portfolio, I've had such a swing of a day because I opened up somewhat okay, but I knew it was going to erase just based on what was happening. And then by about 10:30 a.m. my time, it looked like an absolute shit show. I was getting my hair cut, refreshing my phone every 2 seconds, just watching everything turn red. And I was like, oh, man. And then here we are, basically the complete opposite of where we were at 10:30 a.m. when I was getting that haircut. So it's good to see.
Yeah.
Yeah, the best is when it closes. You could breathe.
Yeah, that's true, which we still have 6 minutes to go.
And we'll record tomorrow morning, guys. Do you want to do this before the opening bell? Dad, is that too early for you or what?
No, it's not. I'm up 6 a.m. here. So
why don't we do 9 a.m. Eastern?
I'd rather do it 8:30.
I mean, that works for me. If
like
you got
30 minutes after open. So we're kind of like, all right, the market.
No, 8:30.
8:30 Eastern, Dad's saying. An hour before open.
Oh, okay, cool. I'm down with that.
Yeah, the earlier the better for me because I like to hang out at the opening and listen to Davey day trade.
Well, let's do 8:30 from now on. We'll give our listeners and viewers a nice hour window before the open if they want to jump on board with whatever.
By the way, I had a physical today, and the doctor was talking to me that her 23-year-old son is living at home with her, and the kid just won't stop day trading with this idiot called Davey the day trader.
Are you serious?
No, I'm serious. Yeah,
it's amazing.
So that's how it goes.
How was the physical?
It was fine. No,
you're still breathing. So
what's up?
You're still breathing, so that's a good thing.
Breathing. Yeah,
see if Penn National can stay up over $3 here.
What then?
I said, let's see if Penn National could stay up over $3 heading into close. That would be something.
I that last week.
Mike, you're up already $10 on that NVIDIA trade.
Good call, Dan. There we go.
Boeing.
I dumped way more in at 138, so I'm pumped. I bought 50 more shares of that.
Yeah, and Bowen's having a great day. Donkey Kong, aka DraftKings. Goldman Sachs is pretty unbelievable. I mean, I have such a stupid put option that I was down so much money on 2 months ago. I'm going to close out of it at this point because it's just a gift from the gods, I feel like, where it's at right now.
Well, the resistance looks around 215-ish, right? If you look at the chart.
I'm pulling it up right now. I was just looking at the put option, how far it's come. I also own that in my RA. Yeah, so it's almost there.
Maybe I'll still hit that Delta option in January. Who knows?
What is that at, Mike?
I mean, I'm still down huge on it. It has to hit $50 or I have to buy it at 38. I don't
that looked a lot worse a couple weeks ago.
Yeah, exactly.
But at the same time, I can't help but just continue to remind myself of Buffett's comments just about everything, where it's like, what does that guy know? What data is he seeing that we're not, where he's just felt the need to liquidate out of all the airlines, all the banks.
I don't think he necessarily knows as much as I think he's a behemoth and always has been. I think he's losing it a bit.
I think he sees more information than everybody put together, and sometimes information is dangerous.
Well, I'll give you a prime example. The airlines, and I saw someone reaming him out about this yesterday in an article, some big analyst, where it's like he was going off of a notion of his own standpoint on flying, being told in his age group and all that. That's ridiculous when you think about it. He's 90.
Well, if you think about it, when he started getting long the airlines were extremely profitable, and they had a great formula to keep seats, 85, 90% occupancy, and they made a fortune.
They could do that again. Have less seats on planes, charge more, have a great experience.
Well, you may not be able to charge more. You don't know that.
I think
you can only charge so much more before it's just kind of tough to do.
Yeah, we'll lose a whole crowd of Greyhound
I would so prefer.
So, yeah, Dad, well, this is the last question, and then we're going to X this out. But we got another question, at least on mine. I don't know why they're not showing up on this. We're going to have to look into that because normally they do. But the question is, what do you feel about the disconnect between the market and valuations and GDP/unemployment? And I'm personally, the way I'll answer that first, I don't think there is a disconnect. I think if you actually look at which stocks are soaring and which ones aren't, the ones that are soaring are ones that don't necessarily operate based off of consumer demand and things like that. I also think there's a lot of confidence in the fact that social programs are going to continue to increase to the point where people who are unemployed are going to be in a better situation than they were back in 2008. And they're going to be able to still participate in the economy. And that's my take on it. But I'm sure people want to hear what your take is.
No, I think we're in a time frame that we've never seen before, like I talked about yesterday. And because of that, we just don't know what the market is really reacting to. But you got to believe that it's looking way ahead, and that's what it always trades off of. And as far as how stretched the market can get, there's been times when it's more stretched than now. And there's no reason that can't go for a longer period of time, especially with low inflation. Low inflation is really good for a market.
That's the key, really. It's like, keeping things at lower than advertised.
And GDP, this is a false GDP this quarter, last quarter. Until everyone is back to work or somewhat back to work, you can't even look at these numbers. They're meaningless. We know it's a disaster. Yeah. Everyone knows it's a disaster. Companies completely shut down. We got to look past it.
They need this infrastructure stimulus actually needs to happen, in my opinion, to make this pandemic turn into progress for our world and putting people to work at another level. My biggest concern is a lot of these jobs are not going to exist from companies that are going under or already have. And you have people that need work. So we need to give them things to do.
But, at the same token, new restaurants will open up, and it's less competition in the beginning. So people will do okay. It's going to be a different economy for a long time.
And there's going to be companies that go under, and there's going to be certain, like you look at what happened with Hertz, for example. I mean, shit, if someone owned a bunch of shares of Hertz, they wouldn't be looking at the economy thinking that there was any disconnect, what's happening in the market and what's happening in the economy. So I think it depends. I think there's a lot of people that have portfolios that have gotten and continue to get derailed through all of this because they're sticking with old school names. And, there's only a handful of companies that have really driven the sentiment and gotten this market to where it is right now.
Again, the 80-20 rule, that goes to play in everything.
So the market closed up 553 points. Hell of a day. I'm pretty freaking pumped, to be honest.
Boom,
huge day. Let's go.
All right, guys.
Bye.
All right, guys. Talk to you guys later.
Yep.